Welcome to the Fort Collins Fellows Podcast, from Colorado State University to New Belgium Brewery, and the hundreds of miles of hiking and biking trails. Fort Collins has earned its well-deserved reputation as one of the top places to live in the United States. Join the fellas as they uncover the stories, places, and people that make Fort Collins so extraordinary.
So Patrick, I always give everybody a hard time about predictions. It's hilarious. Everybody has predictions. Economists, I follow the market all the time. And we're going to do our predictions today. So we're going to jump in the boat. You ready to do this?
I am. I love predictions as well because they're always so very wrong. But it's always the this didn't age very well or this aged well. So it's kind of a coin flip here.
I if anybody follows me on social media, I always love to jab at the experts. I think there was Goldman Sachs came out. They expect mortgage rates to stay above 6% in 2025. I read that and I go, fantastic. Rates are going to be below 6% in 2025. Yeah. I can't wait. So, how do we want to do this? I got charts.
Let's just jump into some of your charts and graphs real quick. Give the folks some visual.
Okay.
If you're watching this on YouTube, there's some great visuals. If not, we'll try to explain it the best we can for the podcast. But go for it.
All right, let's do, I think this one is really interesting. I'm going to share my screen with everybody here. This is home value. This is according to Zillow Home Loans. It's a home value index. You see that, Patrick, right there?
I do, yeah.
It's, everybody talks about how expensive Colorado is. And honestly, this kind of supports that argument.
It does. I was curious where you're going with that. It does absolutely support that.
Totally. I looked at this and I'm like, well, everybody knows the coast, right? You got California and you've got New York. And just so everybody knows, it's kind of a heat map. And so the middle, you can call them the flyover states or whatever you want to call them. It's just kind of very light. It's about 200K on this little chart. But man, Colorado sticks out. A pretty sore thumb.
Especially kind of along that, the front range for sure, but then also along that, a little bit of the western slope in there, Steamboat Vale area. Aspen, of course, is going to be extremely expensive.
Yep.
And then you've got Douglas County and kind of that front range. So it's definitely visually telling you that Colorado is definitely an expensive area.
It totally is. I know. And it's like, I wanted just to show that, just be like, yep, this is right.
Yes, absolutely.
So, all right, let me go to, I got to figure out how to unshare this. This is like, maybe we should have figured this out before I did that, but.
Well, real quick. Yeah, I wanted to jump into the median price. So over the last 12 months with interest rates as high as they were, it really put some, and prices had already skyrocketed since 2020, but interest rates were so low, and then they started to skyrocket in 2022 themselves.
Yep.
And it was really not until 2023 that we saw this really leveling out of prices. And we saw a median price for a residential detached house in Fort Collins just moved from $610 to $620,000. So a 1.6% increase was all we really saw, which is essentially flat. And, we've had a lot of conversations with people over the past of, what do I think that prices are going to do? That's such a hard question. My ultimate response to that is Northern Colorado is a great place. A lot of people want to move here. It's still a desirable place to live. A lot of people's reason why they move here is quality of life, not for affordability or cost of living. It's
Correct.
More quality of life. And people who are moving here generally have the funds to buy here. So I don't necessarily see a huge decrease in that necessarily. I don't see it, skyrocketing. I would love for it to plateau. And that's kind of where my prediction I did a predictions video on our YouTube channel, but I basically think we're going to be a flat again. I think we're going to be another flat year, roughly maybe, 620 to 625, right around 1%.
Yep.
Or under, but I don't see a huge spike, but I definitely don't see a huge decrease until we see some of that inventory, those new listings, kind of like what you're going to show us, increase pretty dramatically.
No, I think, and I tend to agree. And everybody always asks me, is it a good time to buy? And my answer is typically everybody's different. Your family's different than the family that I just talked to. And if it makes sense financially and you can afford the payment, don't worry about interest rates. Don't worry about this. Definitely don't try to time the market. I mean, that is my number one. I'm like, you're not smart enough to figure it out. The people that do this 80 hours a week, can't even figure out. So let's just, we'll end it right there.
Yeah.
Okay.
I think the biggest thing is timeline, like
Yes.
time in the market, right? Like if you're planning to buy and then move in a couple of years, probably not a great idea to buy, a little bit too volatile. But if you're going to be there 3, 4, 5 years plus, I think, man, there's no better way to build generational wealth than owning a house.
100% agree. Do you want to transition real quick to mortgage applications?
I think that's huge. I'm extremely excited to see kind of what you got going on.
This is a really great chart. So this is a chart on mortgage applications, and you see it right now, Patrick?
Got it. Yep.
Okay. So what this really is so the orange line is your mortgage rate. Okay. You can we all know what happened starting at the end of beginning of 2022, 2023. It's come down. The highlighted area behind that is applications.
Okay.
And mortgage applications are basically at the lowest they've been in multiple decades. This chart just goes back to about 2014. But if I were to pull this chart back 20 years, we are at the lowest in terms of mortgage applications. And what I love about that is what a great time to buy that chart, because I definitely see, I can tell you in the first couple of weeks of this year, it's picking up. And so you can see basically, I've been telling people, I feel like we've been in a housing recession for the last 18 months.
Yeah.
June of 2022, I feel like that was, I just saw it coming. And you could see in this chart, that's where those rates kind of broke up right above 4.8%. And everybody's like, there's no way they're going 5 or 6 or 7. Well, they almost went to 8. So
and speaking about timing of the market, so a great explanation of that is I bought an investment property March of 2022. So if your claim is that we started a recession June of 2022, I bought an investment property 2 months prior to that time, or 3 months prior to that time period.
Yep.
Essentially what you would consider the probably worst time to buy, because you wouldn't want, the last time you would ever want to buy a house is basically mid 2007 to late 2007, and then the crash of 2008 and 9. You would love to have bought at basically mid to end of 2009 when everything started to bottom out. But the last place you would ever want to buy is 2007. And I bought, according to your timeline, at the worst time in our current housing recession. But again, I have no intention of selling that property. It's a long-term hold. I'm going to have it for the next 10 to 20 years. And while my appreciation didn't go up by any means, I bought it for $415,000. I think I have it on my books for $430,000 after holding it for 2 years. I'm just not worried about it. This crazy appreciation that we had from 2020 to 2022 isn't stable. So, but if you have a long-term hold, who cares? And to your point, if interest rates come down, I have a decent interest rate on it actually, but if interest rates come down, I can refinance.
It's time frame. That is like the biggest takeaway right now. I love it. So anyways, I thought that was a really cool chart, just showing, mortgage demand with mortgage rates and everything like that. And that would, the same kind of story goes out 20 years.
Inventory is something that's definitely on top of people's minds, because that's kind of the conversation of what's different between 2007 and 2022, 23, as far as why prices didn't plummet. Well, because we had probably 6 months of inventory in 2007, where we have basically a month of inventory. We did peak up to 2 months, 2.2 months at one point at kind of the October time period in 2023. But, drop back down seasonally as expected. November, December, drop back down to that 1.5 months of inventory. We're going to see a pop here come spring. But, the conversation that people have been having are these kind of golden handcuffs. It's hard to have a conversation with somebody who has a 3% interest rate that would love to buy a house with a bigger kitchen, a bigger master bedroom, a fifth bedroom, whatever that reason might be, to kind of do that just step up move. But to sell a 3% mortgage and come in on a 6.5% mortgage is a tough conversation. But I think people are going to become okay with high 5s, low 6 interest rates, and their life desires, their goals, their timelines are going to say, you know what, we got to do it. We want a bigger kitchen. We want a nice kitchen, or we're going to just go ahead and make that transition.
I got another great chart for you. I'm going to pull it up. Speaking of inventory, you're going to love this one too. Okay. I agree. I think, So it's kind of funny. We were talking, we had the value heat map up, and now the inventory. So this is inventory levels compared to pre-pandemic levels shift between November 2019 and November 2023. For those that are listening, this is what the chart is. And you're going to see right in the middle of the country, from Central Texas, West Texas, right on up almost the front range of Colorado. You go into like Southern Wyoming and you can see inventory really ticking up. So as much as the home values are stuck right there, I think we're going to start to see more inventory definitely into the spring and summer. I think, which is going to be, I think it's kind of good for both parties. For the buy side, they're going to have more options. And I think for the sell side, you tell me, I feel like the sellers have had just, they had their cake and they're eating it too for the last couple of years.
More than that, that's what's wild is, I've been in this business since 2009. Sellers have had their way since really 2012 in Northern Colorado. 2018 and 19 were a little bit slower, a little bit more buyer friendly, but legitimately since 2012, sellers in Northern Colorado along the Front Range have had their way with buyers. And it would take a significant amount of increased inventory, which I don't necessarily see a huge spike in inventory, but I do see a better case for sellers and buyers. So I do think a little bit of a leveling playing field, some decent negotiations, very, very few multiple offer situations come spring, summer, obviously depending on interest rates, because that has a huge impact on affordability, but definitely going to see some increased inventory.
I love it. All right, I got one more. Just to kind of go back here real quick. This is new listing, so kind of sticking with the same theme here. Honestly, nothing too crazy surprising about this. This is new listings, national USA weekly single family. And this this goes back to 2021, and there's very obvious mountains and valleys, and you'll notice that the valleys are at the end of the year. And the peaks are in the summertime. So this isn't anything groundbreaking, but you'll hear people talk about inventory and everything like that, or new listings and people getting to sell. Honestly, and that number right there, Patrick, 91,000, you can kind of see the peak. If you take this chart back to 2015, there was like a double top on 2015 at like 110,000.
Yeah.
So maybe a little bit less over a 10 to 15 year period, but I just wanted to show this to say, listen, there's nothing abnormal really going on as people are starting, hey, we're freaking out. There are no new listings. Well, it's kind of following what history has showed us.
And what's wild is like on a total transaction volume in Fort Collins, we were relatively flat 2022 versus 2023. So there wasn't this huge decrease in transactions in Fort Collins, Northern Colorado that you saw nationally. Nationally, there was a 20% decrease in total transaction volume. But Northern Colorado, the last thing I want to say is jinx us and say we're this bubble area and all that kind of stuff. But when you have articles that come out that say most peaceful city to live in the United States, all that kind of stuff, there's always going to be people on both sides of the spectrum, like the absolute huge proponents of Fort Collins that I think, we are. And then those that maybe have been disenchanted with Fort Collins, Northern Colorado for whatever reason and move out. But there's going to be net inflows and net outflows all of the time. But generally speaking, our transactions, buyers and sellers are still making, transactions on a daily basis.
We're in a pocket. Northern Colorado. I mean, I always tell anybody, you just drive from Denver north, from the I-25 expansion to just the massive growth that's going on. And we've talked about this in other podcasts, the locals that are complaining about it. I'm like, well, that ship has sailed, my friend. And I just think more and more businesses, you probably have the best pulse of the market in terms of people moving from out of state through your YouTube channel. And it's amazing. So anyways,
what do you see as things that are like kind of X factors? I'll tell you, I'll kind of read off some of mine.
Yeah.
But what do you see as kind of some of these X factors? Like, so inflation, and you can talk about more than that than I can, because I follow you on Instagram, which you should definitely follow Chris. If you don't, he definitely puts out some good information, from some really reliable, trusted sources. Employment, again, you can kind of chat on that. Motivation to sell. Again, we already touched on this a little bit earlier. These golden handcuffs, but I think ultimately now the motivation is going to overcome that interest rate delta, and they're just going to say, you know what, screw it. Interest rates might not ever come down, but we still want that bigger kitchen.
So what
People talk to.
Oh, sorry. Go
Go
ahead.
ahead.
Didn't mean to cut you off.
I was gonna say one of the things people talk about are defaults. We had these 2-1 buy downs over the last couple of years, but October of 2023 was the absolute peak of interest rates, but there was also 7.5s throughout that entire year. So if you did a 2-1 buy down and you bought in January of 2023 at 7.3% or 7.2%, whatever that was, you could absolutely refinance right now at 6.2% and put that on a 30-year fix. Or you could wait to see, is it going to go down more? You gamble a little bit, but I don't necessarily see defaults being a huge issue. I do, as far as inventory influx, I do see investors potentially pulling the plug, and saying, hey, I'm selling off in some investments. We do have a fair amount of investors that have reached out to us on the sell side, but we kind of chatted about rental rates. Rental rates that people are talking about are going to be compressed. I was like, well, rental rates are being compressed right now just because of the timing of the year. Like, it's just like rentals follow very synonymous, very systematically with listings. And the rental season's same thing, basically spring till end of fall. And if you have to rent out your property during the winter, you're going to have to compress those rentals to get it filled. I had a rental in 2000. We bought in 2016. The market rent for that rental at that time was probably about $2,100. But just to get it filled, and that was my decision, I dropped it to $1,700. So, you've always got to watch and read these narratives as far as rental rates. But I actually think rental rates come spring, summer are going to start to see tick ups. And people are, that delta between a mortgage and a rental rate is going to get smaller, not by mortgages coming down necessarily, but by rental rates coming up.
I like it. Your pulse on the rental market is better than anybody I know on inflation and unemployment. So just a couple macro things that people need to watch out for this year. Right now, the market is always a forward-looking indicator in terms of the bond market, stock market. What you see the numbers today on the stock market is basically they're saying what they think is going to happen in 6 to 12 months. So right now, the market is predicting, and I actually have a chart of this. Let me actually bring it up real quick. So they're expecting upwards of 6 rate cuts this year. Okay. Now, I'll tell you right now, I do not think that's going to happen. The Fed has already come out and said they are expecting to cut the rates by 3 times this year. So let me show you this chart. This is Charlie Bolello. He is a fantastic follow if anybody is on social media and wants to follow him. There's a couple. Liz Ann Saunders is a rock star. There's a couple. But the probability of a Fed rate cut in March 2024 has jumped up to 83%. A month ago, the odds were at 29%. Okay. So, if the Fed does start cutting in March, and I think if the Fed does, they don't need to do 6 like the market is expecting. Because I had an agent reach out to me the other day. She goes, "What is this whole? I hear 3 and I hear 6," and I go, "Well, the market is expecting 6. The Fed is telling you 3." Now, I'll tell you right now, right before the Fed did 75 basis hikes, and they did 4 months in a row. Right before that, the Fed came out and says, "We don't see any situation where we're going to raise rates by 75 basis points." So take everything what they say
Absolutely
with a massive grain of salt. And in terms of employment, that's still hovering right around 4%. That's going to be really interesting to kind of follow. Everybody thought a recession was going to come in last year, and it never came. And now, those same people are coming out and saying, here comes the recession. I actually think there might be a chance of recession this year. And if there is, mortgage rates are coming down. They're coming down faster than people think.
And employment, I talked with my wife, and I've said this on a few different videos, but I've talked with my wife about employment. Employment could very well be the most important indicator, because it doesn't matter if somebody has a 3% mortgage or an 8% mortgage. If they have 0.0 income and they don't have a savings, they've got to sell that property. And so employment is extremely important, because people need to be working, make an income. Unfortunately, we live in a society that savings is very minimal. People put a lot of money on credit cards, have high truck vehicle payments, and live kind of on that tilt. So employment is absolutely vital.
I'll tell you, I think that part of the reason we're seeing activity really pick up at the beginning of the year is I think people for the last year have been told rates are high. It's a terrible time to buy. It's a terrible time to sell. I think people are just over it. And we've seen rates come down a little bit. And one question I always ask first-time home buyers is what do you feel comfortable paying your monthly payment? And it's amazing to see how just the mind
Perspectives.
and the psychology change, because prior to COVID or 2020, even the number was always $2,000. Like I could almost predict it right across the board. What do you feel comfortable paying? About 2,000. That number now, everybody almost says 3,000.
Yeah.
It's just amazing how they're we just need to change our budget. Everybody's budget is different. We need to change our budget in order to get into a house, because that is what our goal is. And I got one more last one for you, and then this is a chart from the Fed. So again, always take that for what it's worth, but it's the gap in net worth is widening. So for those of you who are listening, there's a chart, there's a green bar and there's an orange bar. It goes back to 2010. Homeowner net worth 187,000 in 2010. You go all the way down to 2022, 396,200. You look at the renter net worth, 5,400, and that goes up to 10,400. It's basically flat. So I hate these charts always drive me absolutely batshit crazy. But
well, hold on here. Listen to this. This was great. So today I had at the gym, I was leaving the gym, and this episode is coming out literally a week after we recorded. So it's pretty relevant current information.
Perfect.
An individual who's very involved with, knows Clay Fricky really well, in city planning, and talked to him about affordable housing. And he kind of paused, like, actually, I think it's a more systematic issue as far as affordable housing goes. It's about how can we get people into home ownership to build generational wealth rather than rent in perpetuity, where they're just giving their rental payment, not building a net worth, and not being able to build something, a nest egg for themselves to retire on, to whatever that might be. And it was this individual, not a realtor, not a lender, has no skin in the game, but has a different mindset of affordable housing, not necessarily being built or through area median income and a percentage, all of that good stuff. But it's how do we get individuals into home ownership? And I was just like, hey man, you're preaching to the choir here. So that's no argument on my side.
Patrick, I'll tell you, I heard a great line from somebody a couple of weeks ago. They go, realtors are always saying, hey, it's a great time to buy. And they go, I'll tell you, if you ever meet a realtor that says it's not a great time to buy, they're not that busy and they're not doing a whole lot of transactions. I was like, I love that. I was like, that's a good point. That's a good point.
Well, we do have an election year coming up too, so it's always kind of an X factor. We don't know how that's all going to shake out. There could be some pause in the markets and see who's going to take office, what's going to take office, and do they want to buy in that area even after the fact, or leave the country?
I think this year, I think it's straight up. It has been a tough year for lenders and realtors. 2023 was not a great year for a lot. Some people did great. I think 2024 is going to be good. I really do. I think just the psychology of it. I think rates, even if they just stay you can get an FHA government loan in the high fives, low sixes right now. I mean, everybody's, when are we going to get, we're there on some of these products. Yeah. So I really think that it's going to be a good market. And I think the one thing I would tell all the listeners out there, and we brought it up at the beginning, your time horizon. I love the stock market. I've been invested in the stock market. I posted something on social media earlier, it's, if you bought, I think it was Home Depot stock, which is like at IPO back 30, 40 years ago, you would be up 100,000%. Mm-hmm. I don't care what piece of property you would have bought back in 1988. I don't know if there's people that's up 100,000%. So I'm just saying, I think it's important to stay diversified. But my point is, with the stock market, there's fantastic charts. I don't have one right now, but it says the odds of basically making money, let's just call it for lack of a creative term, is if you hold money in the stock market, basically over 10 years, it's like a 99% chance that you're going to make money. Now, if you're holding stock in the stock market for 1, 3, 5 years, absolutely, you could lose money in the stock market. But then as you pull out 20, 30 years, the returns are just massive. So I think everything has got to be put into perspective. Longevity is a huge thing. If you're going to go out and buy a house and you're going to hold it on to 10 or 15 years, you're going to make money. That thing's going to go up. And here's the beauty of it is it's not like a car payment where the second you drive that car off the lot, it's a depreciating asset. You're buying a house, you're paying a mortgage, you're lowering the balance while at the same time the value's going up. So that gap is just slowly widening, and which is a good thing. So there's my rant.
As long as you're buying, as long as you're buying in an area where the population is growing, and because there's definitely communities, along the eastern plains of Colorado, those little small communities, they struggle for sure. Yeah. They struggle, but if you're buying in an area that's desirable, growing, I think it's a great placement of capital. It might not necessarily be seen as an investment necessarily, but as you saw in that chart that we just showed, generational or net worth differences, it's not something that you can't ignore. You can't ignore it. Well, maybe not necessarily the best thing to look at it as an investment, but you need a place to live, going to be there for a long time. Buying a house isn't a bad thing. So I agree with you. 2024 probably is going to be a decently solid year for Northern
It's going to be a good year. Finally, not that the last couple of years, but I think it's going to be, I think it'll be the best year we've seen probably since 2022.
Yeah.
I really do.
All right, my man. Well, that is it. 2024 kind of predictions, analysis. I appreciate you, sharing those charts, and we'll jump on to our next episode with FOCO Cafe.
Perfect. Thanks, everybody. Have a great year. Friends of the podcast, thank you so much as always for tuning in. We thank you so much for your support. And just so you know, my amazing co-host Patrick Soukup over there, he is the founder, started Soukup Real Estate. If you ever need any questions about buying or selling or just want a market report on your existing home, reach out to Patrick. His team is absolutely fantastic. Born and raised in Fort Collins. His information is right there on the page. Strongly recommend reaching out.
And same for you, Chris. As if you guys are looking at buying or refinancing a home here in Northern Colorado, there's nobody better to reach out to than the Murphy Whitlock Group. And Chris Murphy is going to take incredible care of you. So do not hesitate to reach out, ask questions. He is in no rush, no hurry. So give him a chance. And I think he's going to do a great job for you. Thank you for watching.